So when I'm looking at the daily chart here of ES, so we've been talking about this bounce, rebound, reversal scenario. The markets got really toppy. This was the correction. We got a little bit of a bounce in the market as it became oversold, and then a continuation. We got a little bounce here. We traded that bounce to the downside, and then more of the correction, until a deep oversold condition took place on the daily chart. This is a daily S&P 500. I'm using ES because it has all the data, the overnight, the pre-market, post-market, so it's a little bit more of a thorough chart here. And then we got another bounce, oversold bounce, and that was met by, a further pullback. So this is not a recovery. This is not a rebound. It's simply just a bounce. And so you get 1-2 days, and then it comes off 1 day up, and then 1, 2, 3, 4 days down. So it's just a bounce. A rebound, meaning the stocks are really rebounding, is when buyers actually come in. This could be short covering, this could be a market maker, gamma squeeze, it's a piece of news, FOMO traders jump in, but there's no real buying activity as hedge funds, institutions continue to dump stock, hedge. They'll put on huge hedges. If we look at the VIX during this period of time, you'll see a continued move to the upside on the VIX. That means investors are still putting hedges on, still nervous about what could potentially happen. So bounce and then back to correction. We get another bounce here, sort of a bounce on top of a bounce that needs to prove itself. So when you look at this movement here, and now it's starting to come back up, there's a couple of things that you might look for. Maybe you want to see it get above the daily 50 before you're convinced. Maybe you want to see it get above a major level, like maybe 5,600. Why is that a level? Because you can see how this is definitely a level. Boom, it holds and then rebounds and rejects off of it. So do we want to see it get off of that? Or the daily 20? Do we want to see we just get above that and get some positive RSI movement? Then we can maybe trade that at least up to the 50. So if it does continue and doesn't get rejected here, then it's no longer a bounce. It's more of a rebound. And then once you get above the daily, let's just say the daily 50, I wouldn't say you're back in trend because you really haven't taken this level out, but you're definitely now looking at a bullish scenario. So sometimes if you're short here, you're not sure what to do, you put on a hedge just in case it continues higher. If you make money on that hedge, you have a choice. You can take the money off of the hedge, from the hedge here, and roll it into another hedge because you think it's still going to go down. Or instead of rolling it into another hedge, you could use that money that you made on the hedge to buy more downside. And that allows you to sort of average down. So if you had, say, IWM put verticals, and you thought IWM by June was going to be down here, this is SPY, of course, then you could take some of that hedge money, and if this had cost you $1.50, well, now all the way up here, they're worth 50. So you could buy potentially an equal amount of what you got before, and now your cost for that put vert is down at $1. So you use the hedge money to average down if you believed it was still going to go down. If you believe that perhaps this is now going to break out, you could take that put money, ease out of your longs, right? Get out of them, and then take some of that put money and slowly start buying long positions out in, say, start with June, maybe go to July with some small positions, and now you're long with that money as you ease out of those monthly shorts. As you move into this kind of long scenario, You could be making money, that's great, but then it starts to get a little toppy, doesn't it? Look up here. Starts to get a little bit of resistance on the top. So now what I want to do is now I want to hedge perhaps my long portfolio with a little short-term short. And it's the same scenario, only in reverse. If it makes money, I cash in on that short and either roll it to the next week and buy more because the market's pulled back. Or if I think, you know what, I think this has had it, I'm going to ease out of my longs and take that money and start buying some long puts, I guess you'd say them, but a short position, a bearish position on the monthly July and August. So everybody kind of get the back and forth here. And the reason why it's sort of back and forth, unlike we've traded over the first, 3 years, 4 years of Trade With Me Now, is because we were in this kind of bullish trend. And so we were long most of the time. We shorted some of these deeper pullbacks, but we never really got that many corrective moves, and then bounces on those corrective moves, rebounds, turning into reversals. We really never got that kind of crazy market action. When you get this kind of crazy market action, you have to respond.
Thanks for watching. Hope you enjoyed this video from Trade With Me Now. Make sure to go ahead and like this video and subscribe to our channel so you make sure that you catch our next video right when it's released. Also, if you have a question or comment, please leave that in the comment section below. And of course, if you want to learn more about Trade With Me Now or join our community of profitable traders, go to tradewithmenow.com. There's also a link in the description below.